Good evening, distinguished viewers. This is ICAN on Air, an initiative put together by the Institute of Chartered Accountants of Nigeria as part of our old charter, new chapter, in deepening conversations, in understanding issues of current economic, political, and social interests to our members and friends of the Institute of Chartered Accountants of Nigeria. In this episode, we are going to be having one of our stellar guests to be looking at our advertised topic and looking at the good, the bad, ugly, and why of the capital market in Nigeria. And of course, naturally, we'll be sharing with you some news montage, few news montage as they come about, and a few social diary in respect to what we should be expecting from this great citadel of learning and professional excellence, Institute of Chartered Accountants of Nigeria. This and others will come on. Once again, you are welcome. Again, thanks for watching. The affects Exim Bank's loan approval to Nigeria rises to 5.5 billion naira. Interest in loan rising on a regular and consistent basis for Nigeria. Very interesting news item that we're sharing with you there. Great. We now move to another news item. I think our technical team will be looking at more of this news item as soon as we get them. We'll continue to share this with you. But in this segment, we are going to be looking at the social diary, like I mentioned. And yes, we have one there that says the Fidelity Bank to raise 500 million from the international debt capital market. The Fidelity Bank to raise 500 million from the international debt capital market. There is this for you, a breaking news item from Fidelity Bank, raising debt capital from the debt market. And of course, the rising commodity prices to push CAD to 1.3 PC or 40 BN, this physical reports can be seen in that article referenced 8713593.4.cms. Okay, and that in itself is one of the few things that is showing itself in our economic financial calendar, that commodity prices is pushing up, prices 1.3 percentage points and to 40 BN in this financial report. If you want to get more, please check that out, and that will be it. I want to also say that for now, we are going to have a short break while I try to bring on our esteemed guests to tackle You're welcome back. Now, it is a settled opinion in financial management circles that capital market is an excellent indicator of the performance of the Nigerian economy, because it reflects how well all listed companies are doing. If investors are confident, they will buy stocks. They will buy stock mutual funds or stock options. Now, experts believe markets predict what the savviest investors think of the economy and how it will perform in the short term. Joining me to throw insights into the capital market performance and Nigeria's economic outlook, really, and looking at it in depth, look at its good, bad, and ugly, and the reasons why, will be our seasoned financial whiz kid that has just been unveiled. Johnson Egwuchukwu joins me. Johnson, you are most welcome.
Thank you, Aki, for having me.
And for our viewers, please, you could drop your questions in the chat box. I will take as many as we can within this segment. Now, Johnson, nice to have your insight into how COVID-19 affected the Nigerian bourse as BOURSE. Will you say its performance in the pre-COVID-19 was much better?
Well, once again, I say thank you for having me, and it's a pleasure to be on ICAN program. I'm a member of the Institute and I'm a fellow, and I'm proud for what the Institute is doing, particularly this medium of communicating knowledge to the global community, not just our members. Back to your question. If you look at what the market has done in the past 5 or 6 years, you will be surprised that last year, when COVID hit home run, as we say, the market performed better than it had done in the past 10 years. The market gained 50%. And of course, what we knew what happened was people pulled back and rolled back in their homes, and whatever resource they had, they were looking for any investment window that they could put those monies in. And because the capital market remained open throughout the period of the COVID lockdown, so people were putting all their resources to investment, and we saw a lot of money voted into the capital market, and the market gained last year's 50%. We also saw stimulus in the economy. We saw the State Bank open its doors to the real sectors of the economy, granted about 1 trillion naira loans for the real sector of the economy, 100 billion naira for the healthcare sector. And these monies had a way of impacting on the performance of this company. So investors betted on the fact that the performance of the quoted company was going to be good last year despite the lockdown. And a lot of resources went to that market. So if you compare that to the previous years, you realize that the previous years, the preceding year, which was 2019, the market lost about 14.6%. The year before that, which was 2018, the market lost 17.81%. So the market actually recovered what it lost prior to COVID-19 in 2020.
Very, very interesting that insight. Now, let's go to capitalization very, very briefly. If you look at the Nigerian Stock Exchange, you notice that the value of shares traded, they were actually influenced in different by the fundamentals of the associated companies. And despite the challenges facing those companies, their market capitalization is still it's quite very impressive and high. How can this be explained, Johnson?
Well, I think we have to look at it on a case-by-case basis. There are some companies whose market caps are not even reflective of their intrinsic value. Some companies have been unduly punished because of the macroeconomic environment. Some may have been benefited from the head effect or the sector they belong to. So we have to disaggregate the performance of the market into sectors. Some sectors have done well, some have not done well. And then when you even go to those sectors, you have to look at individual entities. Like I said, there are some stocks that you could actually say, well, if you look at the fundamentals of this particular entity, it is possible that their stock price is overpriced. But across the board, across the quoted companies, would actually believe that a lot of companies have their values understated in terms of their market prices. Because like I said, prior to last year, the market has suffered 2 consecutive years of 17.81% in 2018, and then another 14.6% in 2019, only to recover in 2020 by 50%. So prior to 2020 recovery, a lot of stocks were actually undervalued, based on the fact that the market was punishing them due to the macroeconomic environment. Of course, we saw the economy had been struggling to grow since 2016 when the economy went into a recession.
Interesting. So we had some it was good, some it was bad. Well, of course, some went under. Now let's look at the restructuring that has happened within the Nigerian Stock Exchange. We now have the Nigerian Exchange Group PLC. We have the Nigerian Exchange Limited (NGX), and then we have the NGX Regulation Limited. Let me take this on a one-on-one basis. What, in your view, were the main issues that led to these changes?
Well, the major issue that led to the changes was the demutualization. The Nigerian Stock Exchange used to be a members-owned entity, not-for-profit organization. Now it has been demutualized. It's now a publicly owned company focused on profitability. So for that reason, they had to segment the operations of the constituent units that came out of Nigerian Stock Exchange so as to maintain system integrity. The NGX, which is Nigerian Exchange Limited, is a trading arm, is a operating business, is operating arm of the subsisting companies. And that is the one that provides the trading platform to the market. The Nigerian Exchange PLC is a holding company, and the two other companies that are members of that holding company. You have the regulatory Nigerian Exchange regulations, which is the regulatory arm, which not only regulates the Nigerian Exchange Limited, also regulates every other operator in the market. every other operator in the capital market. And then you have the real estate arm of the business, and then you have the holding company that holds interest in these companies and other companies that were previously held by the Nigerian Stock Exchange. So basic thing is that we have to create subsidiaries or separate businesses so that we can effectively build the Chinese walls and separate the operator from the regulator. And that's informed the decision to create the subsidiaries.
Oh, excellent point there. So, I mean, you just relate that to us. I was going to ask you, so on a scale of 0 to 10, you are happy with the new structure? 0 to 10, what percentage mark are you going to give with the new structure we have?
Well, what I would say is that I will rate it around 7 because it's still evolving. Of course, the NGX started trading a couple of months ago, and beyond that, where it's just going to be listed by way of introduction in the market. So everybody, including you, can buy shares in NGX, in Nigerian Exchange PLC. So, we still work in progress. But if you look at the primary objective of the demutualization, well, that's why I had to score 7. And so far, the transition has been quite smooth. We've not had any major hitch. We've not had any reason to worry about the mutualized NGX. So I think by the time we have it fully listed by way of introduction, have it properly traded, and watch it for 1 or 2 years, and be sure there is no conflict of interest, which is the greatest concern when you have a demutualized exchange, because it's trading on its own floor, and it has to be subject to all the rules and regulations that guide in terms of post-listing requirements. So then we can now increase the rating to probably 9 or 10.
Excellent point, Mr. Johnson Chukwu. There, I mean, management of change will always happen anyway, and your scoring of 7 is quite some impressive mark. Now, let's look at the Securities and Exchange Commission. Now, what role will SEC be playing in all of this?
Well, for a start, Securities and Exchange Commission licensed all the operators I just mentioned, the Nigerian Exchange Limited, Nigerian Exchange PLC, the Nigerian Exchange Regulations Limited, because the Securities and Exchange Commission is the apex regulator of the capital market. It's the one that is responsible for licensing all operators in the capital market, including licensing the members, the employees of those operating companies. Beyond that, it specifies all the rules and regulation that guide operations in the market, in the capital market, and it is the Securities and Exchange Commission that ensures there's orderly behavior in the capital market. So we are all subject to the Securities and Exchange Commission. Members or constituent entity that were created as a result of the demutualization of the Nigerian Exchange are also subject to the authority of the Securities and Exchange Commission. As we all say, those who have power to give life also have the power to take life. So any operator in the capital market is living at the mercy of the Securities and Exchange Commission. Not that it uses that power recklessly, but it uses that power effectively to maintain orderly market.
I see your point. The excellent point you've raised, that as long as the regulators are not stifling and not crowding out investors. Let's talk about the investors now. In all of this, the benefits should be well for the economy. What are the expected benefits and implications of all this for the investor? Just looking at the investor himself.
For the investor, one is that having an NGX or NGS PLC listed will provide additional options for investors to buy into those stocks and make good money. But beyond that, when you have a demutualized capital market, it opens up your market to international investors. You're going to see a lot more interest by foreign portfolio investors in the Nigerian capital market because you are now subject to a higher level of transparency. One of the key elements that drive investors into the market is the level of transparency in that market, where the market is maintaining the highest level of corporate governance. it encourages investors to come to that market. And any market that's fully demutualized also insists on the best standards of corporate governance. So we're going to open up the market to a lot more investors, and capital will come into the country. When the capital comes into any market, it goes into other sectors of the economy. It helps us to build infrastructure. It helps us to build productive activity, productive capacity. And it's when you build productive capacity, you're also going to create employment. So for an average person in Nigeria, there's multiple benefits of having a demutualized market in terms of capital flow into the economy, in terms of opportunities for investment in sectors that are critical to the economic growth of this country, and in terms of job creation.
Great point, Mr. Johnson Chukwu. So it's still a win-win. It's still one of the goods that we are having around here. We're getting quite some questions. This interesting one just came in from Samson Ajibade. That is it true that Mr. Oscar has resigned? And if it is true, why is there any conflict after the demutualization of Nigerian Stock Exchange? Any insight from you on that?
Okay, I have not had an official report of that resignation. I've seen it in a news flash that he was stepping aside. But the basic thing I also saw in that news flash is that that the process of his transition from the Director General or the CEO of Nigerian Stock Exchange into the CEO as Executive Director of or Chief Executive of Nigerian Exchange PLC was not in tandem with the law. So I've not looked at that, but these are based on the speculations. But I'm just repeating what was in the public space. But I need to find out further the reasons behind his resignation, if really and truly has resigned.
Very interesting, and it's always good to check and double check before one gets into a conclusion about any issue, and that's smart. Ejiro Godfrey Umokuro Goodluck is asking the issue of capital reconstruction by companies, example the Union Bank and Co., that resulted to great loss by shareholders is a great issue indeed. Yes? No?
Okay, the way we look at it is capital reconstruction does not necessarily need to lead to losses for investors. Basic thing that happens in capital reconstruction is that a company may have an unwieldy number of shares and decides to reconstruct those shares into smaller units, in smaller volume. And the basic thing is, if for instance you have 10 billion shares, and those 10 billion shares are trading at 2 naira, so it simply means anybody who has and you decide to reconstruct those 10 billion into 2 billion shares. So ideally, the 2 naira shares should now trade for 10 naira, which is what happens at the end of a reconstruction. Because what they adopt the same proportion to the pricing of those shares. But if the underlying company is not doing well, if the operating company is not profitable, then the market may not accept the 10 naira as the price of those shares. It simply means even at the 2 naira with 10 billion shares, the shares were overpriced. So the market will correct the shares to reflect the intrinsic worth of the company. It's not necessarily reconstruction that led to that. It's because the company was already carrying too many shares for which it's not able to pay dividend or pay sufficient dividend. And now that reconstruction will reflect actually the capacity of the company to pay dividend, and that will determine how the market will price the shares. So it could result to the pricing of those shares adjusted downwards or adjusted upwards, depending on the performance of the underlying entity.
Interesting points there. I mean, thank you, and I'm getting quite some nice feedback from online watchers. I have to really thank you for putting that across to us. And I see that members are hooking on the program should be considered for. Okay, that will be a matter for the Institute of Chartered Accountants of Nigeria. I wanted to also ask you, looking at the concept of demutualization. Okay, and we saw that the NGS commenced listing by introduction. What is listing by introduction? And how will it work? Will it be different from a shareholder authorizing a stockbroker to sell his or her shares?
Okay, there are methods that you use to list a company. One of which is, let me dwell on the listing by introduction. Listing by introduction simply means that the issuer or the entity that wants to list will engage a stockbroking house or a stockbroking house and ask them to list the entire shares. They will come to the floor of the Nigerian stock or the exchange, and NGX, and list introduce all those shares as tradable. And from the point of the day they are introduced as tradable instruments on the exchange, on the floor of the exchange, they become tradable. The entire stock of that company become tradable. So it's different from what you call where you have a situation where a company comes and makes a public offer. And that public offer can come in this format, what we call a rights issue. A public offer could come out in form of offer for sale or offer for subscription. An offer for sale will mean that the company is selling existing shares of existing shareholders to the market. And once those shares are sold to investing public, the proceeds go to the people who own those shares initially, and the shares that were sold to the public are immediately listed on the exchange. You also have offer for subscription. In that case, the volume of shares sold, the number of shares sold to the public, investing public, the proceeds of that purchase or sale go to the company, not to the individual shareholder that own them. And those shares that we are sold, we are listed on the exchange. But in the case of listing by introduction, the entire shareholding of a company are introduced on the floor of the exchange, and from the point of introduction, they begin to trade on the floor of the exchange. That's what NGS wants to do. So what he wants to do is that once it's listed by introduction, existing shareholders can sell their shares on the floor of the exchange, and anybody can buy from the floor of the exchange. So at that point, it becomes tradable.
Okay, nice point. Kola Olaiton Esquire asks this, still on the mutualization, that can the mutualization lead to the floating of more stock exchanges in the country?
Well, yes. We already have more than one stock exchange in the country. More than one exchange in the country. We have beyond NGX, we have FMDQ, we have NASD, then we have the commodity exchanges. We have Abuja Commodity Exchange, we have Lagos Commodity Exchange. These are all exchanges operating in the country. Some of them could actually still be mutualized and be traded on the exchange and be listed on the NGX. So it could lead to listing of more exchanges, but currently we have more than one exchange. It's not just NGS. We have, like I said, FMDQ, we have NASD, we have the commodity exchanges, all are exchanges in the country as we speak today.
Interesting one. I'd like to quickly just ask you this question coming from Patricia Fagure. Is it not true that after reconstruction, a company's dividend becomes more meaningful? Ceteris paribus?
Yes, all things being equal. I did mention earlier that, look, one of the reasons why a company might want to do a reconstruction is that if the number of shares is unworthy and they want to reduce the number of shares so that they can pay higher dividends. Take, for instance, a company has 10 billion shares listed and its entire profit is 1 billion. It simply means dividend earnings per share is 10%. I mean, it's 10 naira or 1 naira. Sorry, 1 naira, and earnings per share, if it's trading at 10 naira, is 10%. So if he reconstructs its shares to something like it also means that they cannot afford to pay a certain level of dividend because it only has a profit of 1 billion. So if he wants to pay 1 billion, he'll be paying 10 kobo per share of the 10 billion he has. But if he reconstructs his shares to something like 2 billion, it simply means that he can actually afford to pay 20 kobo or 30 kobo because he's only paying, by paying even 20 kobo, it's only paying 400 million instead of 800 million instead of paying 10 kobo and then paying entire 1 billion. So reconstruction, which reduces the number of shares listed or quoted of a company, could actually make the dividend per share and earnings per share to increase. And also, once earnings per share increase, then it gives the company the latitude to pay a higher dividend per share, unlike when they have an unworthy share capital.
Very interesting point. Okafor Kingsley Maduka is wondering that it appears to him that the Onitsha Stock Exchange is no longer functioning. Any reason that you know, Mr. Chukwu, for that?
Well, I'm not aware that it's no longer functioning. What I can say is that market activities in Onitsha has actually slowed down after the market crash. During the market boom, a lot of investors in Onitsha moved from their normal trading activities to invest in the capital market. So when the market collapsed in 2008, 2009, many of them pulled back from the market, and the level of activities in the Onitsha exchange have actually whittled down to almost a zero level. But I'm not aware that the exchange has been closed.
Okay, excellent. Patricia Fagbure is still coming and looking at MTN's listing by introduction that it was problematic because the existing shareholder did not act transparently. Can I have your insights into that?
It will be difficult for me to comment on an accusation to say that existing shareholders did not act transparently because I'm not privy to such information. Because that's a direct accusation, and I cannot comment on people acting in a ways that I'm not even aware of. I'm hearing that for the first time.
Okay, excellent point. I'll soon give you a breather, Mr. Johnson Chukwu, but let me ask you this. Going back to the Nigerian budget, at the breakdown, the Minister of Finance says the challenge of the nation is not debt sustainability, but revenue challenge. An analyst has recommended that the nation should value its assets and use them to raise funds from international financial institutions. Two questions I'd like to ask you there. What is your perspective on this recommendation? That is, listing our assets and using it to borrow money without necessarily getting back into our revenue. What's your perspective?
Okay, let me start from corroborating what the minister said. We have a revenue challenge, which is a fact of life. We have a revenue challenge as a country. The government revenue is quite weak. If you look at the performance of the budget in 2020, even from 2015, where I've been monitoring it to date, the revenues of the government are always less than 40% of the projected revenue. But having said that, the issue is whether Nigeria can actually use its assets to go and raise money. What are those assets in the first place? The assets must be such that you can actually pledge, that a lender can foreclose, and the asset must be located in a place where the lender can foreclose them if need be. So I do not even see Nigeria having the kind of assets that are viable for purpose of borrowing other than our own good faith, the good faith of the country, which is what the country has been borrowing from. When the country goes to the international bond market to borrow from the Euro bond market, it's basically pledging its good faith that we as a country will honor our obligations to lenders whenever it is due. And then they look at our cash flow, particularly foreign exchange earnings, and they look at our foreign exchange reserves before they lend to us. But if we have to address the problem that as it is today, it is not necessarily to go and pledge assets. Like I said, what assets would you have to pledge? Are you going to pledge the land or whatever? It's for us to evolve a mechanism to bring in private capital into the country to build some of this infrastructure deficit, address some of the infrastructure deficit we have today. The government's efforts to try to build infrastructure from budget allocation is not likely going to achieve the objective it is meant to achieve because of that revenue shortfall. Look at how long it's taken us to build the Lagos-Ibadan Express Road. Look at how long it's taken us to construct a second bridge across the River Niger. Look at how long it's taken us to build a standard gauge rail from Lagos to Ibadan, not talking of going all the way to Kano. And all the entire amount that we're using to build those rail lines are borrowed from China. So we need to concession this infrastructure, particularly those that are commercially viable, and allow private capital to come and build them, under build, operate, and transfer. And maybe after 20, 25 years, they will transfer back to the Federal Republic of Nigeria. They would have recovered their money, but the good thing is when they build those assets, it gives us the latitude to build infrastructure, to build the economy, to build a productive economy, so that our economy become more viable and the government revenue can grow. Because only when the economy is producing that the government can generate revenue from taxes. An unproductive economy will not generate revenues. So we need to address the revenue issue from infrastructure build, and that will come from attracting private capital into those critical infrastructure.
Alternative views that you have shown in there, because we know that Brazil and India are going a particular direction, but you just made a mention about attracting foreign direct investments. How do you think the NGS can assist Nigeria, our country, to attract such direct investments?
Well, what I would say is that a vibrant capital market has a way of attracting capital into the economy. And this is basically what happens. If you have a vibrant secondary market, so stocks are traded and those stocks are traded at their actual values or actually generating capital gain for investors. What that means is that investors will be ready to invest in private, in initial public offers and in debt instruments that come into the market. The initial public offers will generate capital for companies that are doing business in the country, and they will use those capital to invest in infrastructure, invest in capital goods, and then go into productive activities. So if you have a vibrant secondary market, it has a way of stimulating primary market. It's the primary market where capital formation takes place, and those capital goes into productive activities. That's how the capital market helps in the economy, and that's why every free market economy requires a vibrant capital market.
Interesting point. At this stage, I am going to try and give you a breather, and when we come back, field a few more questions. Viewers, we are now going to go on a short interlude. Please don't go away. We shall soon be back. This is ICAN on Air. You are welcome back. Before we went on break, Mr. Johnson Chukwu has been fielding questions on some aspects of the capital market in Nigeria with a view to looking at our economic outlook, revenue shortfall, and what have you. Welcome back, Mr. Chukwu. I want to get back very briefly to our investment in stock exchange, which is by and large influenced by real-time and online information, correct? Now, I'd like to ask you, what role has technology played in the growth of the Nigerian bourse? Briefly.
A lot. In fact, the market today is a reflection of how strongly the technology has evolved. We used to have what we call call-over system, where we had to be shouting at each other to call over report. We used to have a situation where settlement we are taking days, multiple days to settle. We used to have cases where dividend warrants will be posted to remote location and they will never get there in 10 years. So all those things have been breached to a large extent by technology. Today, you don't even need to get to the stock exchange to trade. You can trade remotely from the comfort of your office. Beyond that, even as individuals, an investor, or other people who are listening to us, they can download the applications of any of the stockbroking houses, including Cowry, and then you with the application on your system, you can place your orders for stock, buy your stocks, sell stocks without necessarily speaking to anybody. So technology has evolved to such an extent that the market is largely riding on technology today.
Super. Technology will always be an enabler, or of course. Now, let's narrow this down. All the efforts that we've seen the fintech companies do, okay, are there really efforts to list fintech companies on the NGS to push their capacities to contribute to the nation's development?
Well, what I would say is that the fintech companies are an evolving group. And as we know, many of them have begun to access funding from foreign investors. So some of them are just putting structures in place, like corporate governance structures that will enable them present themselves before investors, local investors. Eventually, you're going to get to a point where their capital need will make it compelling for them to come to the market to raise additional capital. You're also going to get to a point where the investors that are making investment in the fintech companies are going to ask for an exit window. And one of those exit windows that could be that they want to have their shares sold to either another core investor or listed on the exchange and they exit through the stock exchange window. So ultimately, we're going to see this evolving and fast growing sub-segment of the economy come to the market because of the need for capital, because of the need to liquefy their shareholding so that those investors will find it more attractive to put money in them.
Excellent. It's nice to hear that work in progress. I'm sure you're going to catch up. Now, let me ask you, how innovative has the NGS been in terms of development of financial products? Now, how can the depth of the NGS be deepened not only to reposition it to support local investors, but also to provide more investment opportunities?
Okay, in the first place, in terms of how has the market been deepening itself, or how it's been deepened, or in terms of product offerings, we have multiple products. I can also see a question there that's asking for the kind of, we have multi-asset exchange. We have equities, we have fixed income, and the fixed income is broken into several segments. We have federal government bonds, we have other corporate bonds, all traded on the exchange. So you have debt instruments. You have exchange traded funds on the exchange today. We're trading exchange traded funds. So we are also trading mutual funds, or collective investment instruments. So you have several instruments that are tradable on the exchange. And basic thing is that when you have multiple assets on an exchange, it gives opportunities for those who are interested in particular asset classes to see those assets and invest in. So as it stands today, we are deepening the market by introducing a lot more products into the market. So that's that. That addresses the question.
Interesting point. Let me just quickly smuggle this in just 2 or 3 seconds from Chonde Musa. What is the situation of derivative being traded on the NGS? Just briefly, what is the situation of derivatives being traded on NGS?
Okay, in the first place, exchange traded fund is a derivative. We are working towards having the likes of futures and options traded on the exchange as well. But the market is still evolving. But we are gradually introducing derivatives. I had mentioned earlier the exchange traded fund is a derivative, and a lot more other derivatives are going to come to the market. Okay,
excellent. Now, look at last 24 months. The interest rates on fixed deposits, treasury bills, et al. Have crashed. How have these stirred activities in the NGX?
Well, as you know, what happens in the economy is that if rates on fixed income instruments decline, investors underweight their portfolios in fixed income and overweight them in equities. If you may have observed that we've seen a bull run in the exchange in the past couple of weeks, the past few weeks, and that could be partly as a result of the fact that investors have more confidence in the market. Investors think that with the increase in crude prices, that the economy will stabilize. And again, return on fixed income instruments have declined, and people are now going to variable income assets, which is what equities present. So that's what's happened. Once you have a decline in fixed income rates, there will be a shift in investment from fixed income to equities or variable income assets. Because at the end of the day, you're looking at, okay, the dividend yield could be higher than the return you will get from investing in fixed income instruments.
Okay, excellent. Very, very quickly, because of time, I introduced you as a financial wizard, and given your several years of involvement in the capital market activities, in just 2-3 seconds, possibly, what critical issues do you think the regulators of the market should revisit to enhance its attractiveness and product offerings? Very briefly.
Well, one of the things that we need to continue to work on is introduction of more products. One, we also need to continue to push to introduce and have listed the sectors of the economy that have the strongest weight in the economy. As it stands today, the capital market does not represent the structure of the economy. Agriculture sector accounts for 23% of the economy. Only 2 companies are listed. Manufacturing accounts for about 9% of the economy. Only a few of them are listed. The oil and gas sector accounts for about 8% of the economy. You only have 1 upstream operator, Seplat, listed. If you look at the telecommunications sector, of course, we have some representation there, which accounts for close to 17% of the economy. We see a couple of them are listed. So we need to have a representative of the sectors of the economy on the exchange, so that we have a broader and deeper market.
Excellent. I will let you out now, but there's no way I will finish my discourse with you without talking about ethics, regulators, and what have you, and the stockbrokers. Of course, many have accused the stockbrokers of insincerity and lack of transparency in their dealings. Is there a code of ethics that guides their conduct?
Yes, absolutely. There's a code of ethics that every operator in the capital market, which every operator has to subscribe to.
So
and there are sanctions.
Okay, who sanctions them? Who sanctions them? Where it is proven?
People, yes, when there's an infraction on unethical behavior, depending on the severity or the gravity of that action, and as it relates to the rules and regulations that guide operators, you could have a situation where an operator could be completely excluded from the market, could be banned from operating the market. We have several instances where operators were banned from operating the market.
Mr. Chukwu, are there remedies available to an investor affected by a misdemeanor by a stockbroker? Are there?
Yes, there are funds that have been set. They are actually funds that have been set aside by the exchange, where if your stock have been sold by an operator, you can actually have a claim and that you'll be indemnified. But the good thing that the structure has been put in place so that it's difficult for a stock broker to sell your stock, because you now have direct cash settlement where this process of the sale of your stock goes straight to your account. But in the past, what used to happen, they had to set up a fund to indemnify all those who lost value as a result of the misbehavior and misconduct of operators.
Nice to hear that. That's a good point and very restful for investing public to know. Yes, I will now want us to go on another short interlude for we to just come back and quickly round up.
Are necessary to drive economic growth and in support of the public interest.
Thank you for staying tuned. In the past 45 minutes or thereabouts, I've had Mr. Johnson Chukwu delve his insights into critical elements of the capital market, how it affects the investors, how it affects the regulators, should affect the regulators, and the fact that technology will always continue to be an enabler, of course, naturally looking at work in progress. Mr. Chukwu, I'd like you to just round up for me with your last words on our discussions of tonight. Let me have your last comments.
Okay, my last comment will be that the capital market will continue to present opportunities for capital formation, and every society that wants to develop in terms of build the economy must have a vibrant capital market. So we should individually patronize the market. At the end of the day, you cannot run away from making investments. It's the way to build for your future, including some of us at some point we get old and we may not have the muscle or the energy to continue to do what we do today. So we're going to fall back on our savings. The capital market is one of the best platforms to save money and build the economy.
Also point, Mr. Johnson Chukwu, it's been nice having you, and I'd like to also let you know that we'll be calling on you from time to time. Come and share your wealth of experience, practical experience this time with us. I also like to appreciate online viewers and guests, your questions. They kept on coming in torrents. We're able to pick some were not able to pick, and your very nice, fantastic, encouraging comments to our production team, our back end and our front end, to bring the ICAN on air to you 2 times in a week. And next week, Thursday, we are going to be having as guests Ben Akabweze Esquire. Ben Akabweze is the Director General of the Budget Office of the Federation, and he will be addressing this constant topic, which is the year 2022 budget of economic, growth and sustainability. What are the matters arising? Time remains 6 p.m. West African time. We'll expect you to please look out for this, tell your friends, and get tuned on. Now, let me leave you with these ennobling words of Warren Buffett. And I quote, "The stock market is a device for transferring money from the impatient to the patient." And of course, like I always say, be the change that you always want to see. I remain Akifatunke, your anchor, ICAN on air. Bye for now.
My distinguished member, it's no longer news that our nation is going through a tough time. The economy, insecurity, infrastructure decay, unemployment, name it. Trust is lost between the government and the governed, between enterprises and clients. As professionals, we can no longer fold our arms while things go wrong. We need to stand and be counted by offering the government our expertise to find a lasting solution to this myriad of problems. To this end, the Institute is dedicating its 51st Annual Accountants Conference as a platform for technocrats to x-ray the nation and profile workable solutions to these challenges. The theme of the conference, which holds from November 29 to December 3rd, is Trust in Governance. How can government earn our trust? Why not join our lead speaker, Mr. Akinwumi Adesina of the African Development Bank, and other renowned speakers at the conference as we lay it all bare. I look forward to personally welcoming you at the conference. See you there, because it promises to be intellectually stimulating and experiential. Thank you.